Welcome back, everybody, to Leading Experts. I'm Grayson Foster. Joining me today is Mr. Kwe-Parker. Mr. Parker is one of the nation's leading FHA and VA mortgage experts. He is a nationally ranked mortgage originator, a radio show host, author, columnist, and the executive director of the NSM Rate Reduction Department. And he's here today to tell viewers how you can lower your existing monthly mortgage payment on your FHA or VA loan without requalifying and no fees. Mr. Parker, welcome to the show.
Thank you.
All right, first question, obvious question. You're a nationally ranked mortgage originator. What exactly does that mean?
That means basically the average loan originators do, I would say, an average of maybe 150, 200 transactions annually.
Okay.
We do excess of 2,000.
Amazing. So you're a busy guy.
Pretty busy.
Yeah. And you say that you have a whole team of people working with you.
We have a team of people, yes, we do.
Okay. And also explain for our viewers that might not know, what exactly is an FHA loan and what is a VA loan?
Sure. FHA and VA mortgages are very, very similar to conventional loans. The only difference is they're guaranteed by HUD, the Department of Housing and Urban Development. They're government guaranteed loans. That means that in the event that the homeowner would go into default on a loan, the government would then step in and compensate the bank the money that they loaned the consumer.
Okay.
That's all it means. They're not subsidized loans. They're not for people with bad credit or anything like that, like many people believe.
Right.
They're just regular mortgages guaranteed by the government.
Right, because that's what I thought it was too. I assumed that it was people, a mortgage for a person that had bad credit, what have you, so I didn't know that either.
Not at all. A lot of people you have people who are wealthy, you have everyday working class Americans with FHA and VA loans.
Okay. So how are you with your company helping people right now who have an FHA or a VA mortgage to lower their payments?
What we do is we actually have found a way through the HUD guidelines to take an existing loan where a person has borrowed money, say for 30 years at X rate, and we can actually lower that interest rate for them and have the new bank incur all the costs in getting the loan. They even compensate us for the whole entire transaction.
Okay.
So in essence, the homeowner gets a lower mortgage payment, a lower interest rate without requalifying for free.
Right.
No cost involved. And the whole process, it takes less than a half hour.
Now, I know we were talking before the show today, and one of the things that you had mentioned was loan officers out there are getting a bad rap. And you do want to clear that up for us, right?
Yes.
Yeah.
I found it a major conflict of interest if you contact a person for a loan and you ask for advice on what product you should get, and they're compensated based on which program they recommend.
Right.
So all of our staff are salaried people. Everyone that I have helping our clients, they're on salary. They're not getting a percentage of the loan based upon what they recommend. I think that's the only way to make sure that they can give unbiased, honest advice to the consumers.
Because they're really there to help you, not to upsell you into some other loan product. Now, something for me as a consumer, if I hear, okay, I have to remortgage or I want to re-rate my mortgage, right away I think, I don't want to do this because it's going to take a hit on my credit score, and you're saying that's not true at all.
There are a lot of myths. Obviously, if you were to lower your credit score any time that you took a look at another option, it would be very difficult for people to maintain good credit.
Right.
These are myths that were put out there by lenders to discourage people from changing their loan options. There's no negative ramification. The existing lender doesn't lose out because a person modifies their existing loan. The consumer has a right to take advantage of anything that's going to put money in their pocket. And that's the way it's structured. That's the reason HUD created the program, to help the consumers as well as protect themselves.
See, I did not know that. I assume that immediately it's going to take a hit on your credit rating.
No, not at all.
Not the case.
Not at all.
So how exactly, with no fee involved in your program, how is it that you're getting paid?
That's the magic question.
Right. I'm sure a lot of people want to know,
This
right?
is a business. By all means, we're not just doing this as a philanthropic venture.
Right.
What we do is we actually find an opportunity in the market, and we time the market very precisely, where the consumer who has registered their loan with us can get a better interest rate, and the new bank is willing to compensate us enough to pay all the title fees, settlement costs, and then also give that client the new loan and deliver that loan. What's left over basically is what we earn.
Right.
So instead of with traditional mortgages, the mortgage company charges the client in order to work with them. We work it from the opposite perspective. We make the lender pay us, and we give the client a no-cost option.
Okay. And something I thought that was interesting, you told a story how you've been doing this for 8 years.
Yes.
And you're proving to people how you can save the money by, you know, re-qualifying with you, re-rating with you.
Yes.
And if you can't, then you were giving them a trip.
Yes.
But you've never had to do that yet. Yeah.
We even tell people that I would say that 75% of the people, whether they think they have the lowest interest rates or the best loan terms, where if we look at their loan structure, that we can usually find one mortgage payment that they've lost or wasted in not taking advantage of opportunities or just how their initial loan was structured. We even for a while told people if we couldn't do it, we'd send them away to a Wyndham resort or something for 2 days.
Right.
And we haven't given away one yet.
So I guess you're obviously successful.
Yes, we're very successful.
Okay, so explain to people the process of what they need to go through. I mean, the first step is to register their loan, and how easy is that?
The process is incredibly simple.
Yeah.
You can register your loan by calling a lender who actually handles FHA rate reductions.
Okay.
Our department is one of those. And simply giving them your information so that they can keep an eye on things and look for opportunities to save you money. Okay. After that, it's as simple as when the opportunity presents itself, just call the office, and it takes less than 30 minutes for the process. Everything is on the phone, basically. No interaction, no meeting, and everything is finalized without the person leaving their house most of the time.
And what if people out there are watching and thinking to themselves, well, you know, how qualified are you, or I'm afraid to do this, and is this real, is this true? What would you say to that viewer?
These are HUD-backed programs.
Yeah.
These are government-created and government-insured loan programs. And people will often believe that it's their money. It's the bank's money we're talking about. Mm-hmm. And it's insured by HUD. If you can borrow it at less with the same loan terms, why not? Why would you want to pay $2 for something if you could pay $1 for it? Doesn't make any sense. We're government. We're also sponsored by HUD to provide this program, and we've never had any complaints of any sort. And we've helped over 15,000 people this way.
Amazing.
And
amazing.
I'd say almost 90% of them never wrote us a check.
Wow. Amazing. Okay, I do have to take a break right now, but stay with us. Leading Experts, we'll be right back.